A lot of you have been writing and saying the same thing. I'm seeing posts everywhere claiming inflation is falling, but at the same time they're saying the government is firing up the money printers again. Which one is it? And what does that actually mean for my Social Security check, my SSI, my SNAP benefits, and my everyday bills? That confusion is completely understandable. Social media has been filled with half-answers, screenshots without context, and bold claims that don't explain the full picture. So today, let's slow this down, clear the noise, and walk through what's really going on in plain English. The headline you're seeing is real. Recent official inflation data shows inflation cooling to around 2.7%. That number matters because for a long time inflation was running much hotter and prices were rising faster than most fixed incomes could keep up with. When inflation cools, it suggests that price increases are slowing down. It does not mean prices are going back to where they were. It means the rate of increase is easing. That distinction is important, especially for seniors and low-income households who feel every dollar at the grocery store and pharmacy. So why at the same time are people saying the money presses are back on? That phrase sounds dramatic, but what it usually refers to is increased government spending, expanded lending programs, or signals from policymakers that they're willing to support the economy if growth slows too much. It does not automatically mean checks are being printed and mailed out. It does not mean stimulus is guaranteed. And it definitely does not mean free money is on the way tomorrow. What sparked this conversation is a mix of recent economic reports, comments from Federal Reserve officials, and budget discussions coming out of Washington. On the inflation side, the data shows that price growth has cooled compared to the peaks we saw before. Some categories have eased more than others. Energy prices have been less volatile, some goods have stabilized, and supply chain pressures are not what they were a couple of years ago. Officials have acknowledged this progress publicly, often saying inflation has come down but is still being monitored closely. At the same time, there have been signals that policymakers are concerned about slowing economic momentum. When inflation drops closer to their target, it gives them more room to support the economy if jobs weaken or growth slows. That support can come in many forms. It can be interest rate adjustments. It can be lending programs for banks. It can be budget decisions by Congress. And yes, in some cases, it can involve increased government spending. That's where the money presses phrase comes from, even though the reality is more complex and less dramatic than social media makes it sound. For seniors and benefit recipients, the key question is always the same. How does this affect me? If you're on Social Security retirement, SSI, SSDI, VA benefits, or SNAP, inflation data matters because it influences cost of living adjustments and broader policy decisions. Lower inflation can reduce pressure for large COLA increases in the future, but it can also help stabilize prices so your existing benefits stretch a little further. There's a balance there, and it's not always comfortable. It's also important to be very clear about what is confirmed and what is not. The inflation number is confirmed data. It's published, reviewed, and widely reported. The idea that money presses are back on is more of an interpretation of policy signals than a confirmed action. There is no announced nationwide stimulus check tied directly to this inflation report. There is no finalized legislation promising new cash payments to seniors or low-income households. Anyone telling you otherwise is either misunderstanding the situation or deliberately exaggerating it. You may see posts claiming that because inflation is down, the government will now print money again and send it out. That leap is not supported by any official announcement. What officials have said, in careful language, is that they're watching both inflation and economic growth. They've talked about being flexible. Flexibility does not equal guaranteed payments. When it comes to eligibility questions, this is where rumors can really do harm. If there were to be any future assistance programs, eligibility would depend on the specific program. Historically, that has meant income limits, household size, and benefit type matter. Seniors on Social Security retirement benefits are different from SSI recipients, who are means-tested. SSDI is tied to disability status, not income alone. Veterans' benefits have their own rules. SNAP depends heavily on income and household expenses. None of that changes just because inflation drops to a certain number. Another thing people are asking is where the money would come from if support were expanded. In general terms, government spending is funded through a combination of tax revenue and borrowing. When people talk about printing money, they're often referring to borrowing and central bank actions that increase the money supply. That can support the economy in the short term, but it also carries long-term risks if done irresponsibly. Policymakers are very aware of that trade-off, especially after the inflation surge everyone just lived through. That's why the tone from officials right now is cautious. They're not declaring victory over inflation, and they're not announcing a spending spree. They're saying inflation has cooled, progress has been made, but risks remain. That's a very different message than what viral posts tend to suggest. Let's talk about timelines, because this is another area where misinformation spreads fast. Inflation data comes out regularly, but policy changes take time. Even if leaders decided tomorrow that some form of economic support was needed, it would go through discussions, proposals, debates, and approvals. That process takes months, not days. There is no realistic scenario where a drop in inflation this month leads to surprise payments next week. It's also worth saying plainly that lower inflation does not automatically mean your cost of living feels lower. Many prices rose sharply over the past few years, and even if they're rising more slowly now, they are still high. Rent, food, insurance, and healthcare costs are still major pressure points for seniors and low-income households. Officials know this, and many have acknowledged that people don't feel relief just because a percentage number looks better. So what should you do right now? First, stay grounded in confirmed information. Rely on official statements, reputable news outlets, and direct updates from agencies like the Social Security Administration or your state benefits office. Second, review your own budget with today's prices in mind. If inflation is easing, it may be a good time to reassess expenses, shop around for better deals, or ask about assistance programs you may already qualify for. Third, protect yourself from scams. Anytime there's talk of money, scammers come out in force. No government agency will ask for your social security number, bank details, or a fee to release benefits. If someone promises you money in exchange for information, that is a red flag. It's also smart to remember that economic headlines can change quickly. One report does not lock in a trend forever. Policymakers adjust as new data comes in. That's why steady, informed updates matter more than viral claims. I want to be very transparent with you. Right now, what we know is that inflation has cooled compared to its recent highs. We know officials are watching the economy closely. We do not know of any finalized plans for new direct payments tied to this development. We do not know what future assistance programs, if any, might look like. Anyone claiming certainty on those points is getting ahead of the facts. At the same time, it's reasonable to pay attention. Economic shifts do influence policy, and seniors and low-income households are always part of that conversation. Staying informed puts you in a better position to respond if changes do come. If you're feeling anxious, that makes sense. Fixed incomes leave little room for surprises. My goal here is not to hype you up or scare you, but to give you a clear, honest picture so you can make decisions based on reality, not rumors. If you have questions about how this might affect your specific situation, drop them in the comments. If you're seeing claims online and you're not sure whether they're real, share them and we'll talk through them together. And if you want calm, fact-based updates as things develop, make sure you're subscribed so you don't miss them. We'll keep watching the official data, the statements, and the proposals as they actually happen, and I'll continue breaking them down in a way that respects your intelligence and your time. You deserve clarity, not confusion.